Well, thank you so much, everyone, for being here today. Welcome to Elevate Sacramento. We have a very special guest here today, which I will introduce in just a moment. First, I'd like to introduce myself. My name is Gracie Oskrums. I am a SMUD employee on loan to the Sacramento Hispanic Chamber. So if you have any questions about membership with the chamber or any chamber questions, please feel free to give me an email. And if you have any SMUD questions as well. So we have a very special workshop for you today. In our guest of honor here, we have Brenda Rejamand, sorry, Brenda, with BD Tax Finance Group, LLC. And let me give you a little details about Brenda. Brenda is actually our vice chair of the Sacramento Hispanic Chamber Foundation. And also, in addition to that, she's the only Latina that sits on the Sacramento BBB, Better Business Bureau Board. So we are very honored to have this privilege to have Brenda here today to share her amazing knowledge with us. Thank you. Brenda.
Thank you, Gracie. I am really happy to be here today, and hopefully we will take advantage of these 2 hours that we're going to have together to learn. I always say learn together, okay, because there's always so much room for knowledge, but I'm happy to be able to share what I know about how to structure your businesses. I am Brenda Rejamand. I'm an enrolled agent, and I have a tax business firm in Sacramento. Now we are doing our services virtual, so we practically have clients throughout the US. Okay, so it's not only in Sacramento. And, we take a lot of pride that we are a family business, but also we are Latinos mostly, because my husband is Iranian. That's how the regiment comes in. In the meantime, I would like to, while we wait for other attendees, what I would like to know is we're going to have Caroline and Marco tell us what they're expecting from this workshop today. Okay, I would like to know what their business goals are, how long have they been in business, or maybe they're just getting a 1099 and they need a structure of how to save tax or how to do their books. Everything counts, okay? Every situation you're in counts, because at the end of the day, you're trying to not only maximize your business or your revenue, or maybe you are in a tax situation, and that this is structures that we're going to talk about today will help you organize yourself better. Okay, so let's start with Caroline.
Hi, everyone. Hi, Brenda, Gracie, and Marco. I am Caroline Fox. I'm a financial advisor with Edward Jones. I help individuals and businesses with their financial goals, elevating where they are and helping them take more control. And during my conversation with my current clients and future clients, the question regarding the appropriate formation of their business comes up. And so my goal today is to understand those differences. I learned about the differences many years ago, and I'm sure nothing's static. And so I want to relearn or learn new things about these different formations, as well as have Brenda as a resource for anyone who may be needing a referral from me. And those are my goals today.
Thank you, Caroline, for sharing that. We will definitely talk about a little bit of everything today, and we're very diversified in different industries. And I understand what you go through every time that you're trying to help someone, especially when they don't know where to put the money anymore because they're making good money and the tax consequences are huge, right? So that's really where I'm sure that you're coming from. And these clients always have these questions. What should I do? Where should I put the money? Or should I make myself an LLC? Or, so I know what you hear mostly, because I get that too. Okay, so let's continue with Marco. Marco, can you hear us?
Marco, I think if you're talking, you're muted.
Maybe he can't hear us. Okay, so what we're gonna do, Gracie, let's start with the PowerPoint. And then if Marco can, wants to, talk to us, then we'll allow him because we have plenty of time. So let's go to the PowerPoint.
Okay.
And like I told Gracie, this is gonna be a very interactive workshop. So you're able to not only write your questions at the chat, but we can always, talk to each other, okay? Because that's really how you learn. That's how you're gonna learn. I'm gonna use a lot of examples that can definitely, you can relate to, or if you have clients that that can relate to that, that's how the law stays in your mind, by knowing what happened to someone. And I like to do that a lot because that way we know the normally the law is too boring, and sometimes you can't catch what they're trying to say to you. But when you hear what happened to someone and how that someone fixed it, right? Or what the IRS was expecting from that person and to move forward, then that's how you remember it. Okay, so today is the forms of ownership, choosing the legal structure for your business. Okay, that's what the title is. So we're gonna, and that's how my name is written, Brenda Rejamand. I'm a president and CEO at BD Tax and Finance Inc. And that's my phone number in case you have any questions later. Okay, so we're gonna continue to the second slide. And I see we have Veronica Ortiz. And Veronica, can you hear us? Can you give us a little bit of what you're expecting from our workshop today?
Hi, thank you so much. Can you hear me?
Yes.
Perfect. Yes, I started my own, I'd retired after 30 years in state service and started up a business on my own for clients to do some additional work beyond. But questions that I have are the appropriate methods for setting up the business. So trying to figure out, what is it that is the best approach for me? And when I looked at the definitions on this, I was intrigued to listen to this conversation because I don't know whether, what type of business I should set up, I guess is what I want to say. And so I'm hoping that this will enlighten me and give me some information, because the business I'm setting up, I'm not looking at it to be, huge revenue. I'm doing it because I want to enjoy the work that I'm doing for, at this point in my life, but I just don't know how to go about setting it up properly.
I'm sorry, Veronica, what industry are we talking about?
So I'm doing consultancy work.
Okay. And this is for businesses or for?
It's for, I've got a couple of clients currently. And so one, it's primarily setting up meet and greets, if you will. So
Okay.
folks that are interested in doing business here in California, scheduling meetings with state, federal, local entities for them to have a discussion about doing business here in California. So it's kind of I want to say meet and greet consultancy. And I'm just trying to figure out, how to best set this up so that I'm not being highly taxed and, having to deal with all of that. I'm not going to have staff. So that's not something for me to worry about at this point. But, what is the best route? I'm just trying to figure that piece out.
Okay, I see. All righty, that's, it's good to know this, right? It's
Thank
always
you.
good to know that we see, this is why I say I always learn, because I am always impressed by people like you, that they start something different that I don't see every day, right?
Yes.
But at the end of the day, we all have to follow the same rules, and we all have to be in compliance, and we all have to look for a structure to, have a more definition of what our business looks like, right? So
Right.
that's what we're going to talk about today. Okay, so see, you want to start a business? what does it take to be an entrepreneur? This, Veronica, takes being an entrepreneur, you know, me, everybody that wants to, that has an idea and they want to put it together into a business. That's what entrepreneur means, okay? And we all have, so that's the definition, but we all have characteristics that I want to talk to you about, and I will tell you why I'm talking about this from the beginning. Let's follow the third slide, Gracie, please. So you have to be passionate about how you're going to achieve your goals, okay? You have to have the spirit of adventure, be goal-oriented, be innovative, creative, versatile, be persistent. Because if you have the passion about what you want to start, but you're not persistent, then that means that you give up too easy. It means that you probably haven't done 1 year in what you're trying to do, you know, get this business going, and you're like, oh no, this is not going to work, right? So you have to have persistency. You have to be hardworking, energetic. You have to be positive. We need to continuously be positive, even if it's raining too much and you're not getting anywhere, and all of these chaotic moments you're going through it in your first year of business. You still have to be positive. You know, no, it's gonna work. It will work, and everybody's telling you no, it's not gonna work, but you still have that in you, and you know that you will make it work, right? You have to be willing to take initiative. You have to have a strong sense of commitment, right? Because every business, every idea that you come up with needs money. You need to have money to be able to make this work. And if you don't have money, that means that you have to go borrow it, right? Or like if you just retire, then the money is coming from somewhere. You need capital, right? To be able to make this work. So anything you do needs commitment, and you have to be self-confident and self-reliant. So that defines an entrepreneur. And we all start somewhere, because as I speak today, I have my own business too. And I don't only have one, I have two different industries that I'm dealing with every day. But at one point it was just an idea. And believe me, I've done other things that some of them didn't work when I was very young. So when you're an entrepreneur, you know, you want to put this in place, right? You want to make it work. You want to make it not only you're passionate about, and you want to transfer this idea to the community and make money out of it, but it doesn't always work like that. So today we're going to make sure that you know where you fit in when it comes to your legal structure, but also you will understand more of, you know, who are you dealing with? Because sometimes, and I always say this, entrepreneurs, it doesn't mean that they know how to manage a business. An entrepreneur, it means that yes, you can be very creative, but it doesn't really mean you will be able to manage that business as you desire. Okay, because it takes a lot of commitment. It takes a lot of rules following. It takes a lot of you being on time with all these legal documents. And sometimes it's just way too overwhelming. So we want to make sure that today you feel, okay, so I fit here more than on this one. And I want you to ask me questions as we go. Okay, let's continue. Okay, so let's talk about the forms of business organizations. I'm sure that you heard of them. Sole proprietorship. What is a sole proprietorship? Sole proprietorship is when you, again, start with an idea, and maybe this idea could be a restaurant, it could be consulting, it could be a tax firm, it could be anything. Financial advisor. The financial advisors, they normally get a 1099, okay? So even though they're working under an umbrella, but they're still considered, IRS will look at them as a sole proprietor because they're getting a 1099 and they have to do in a Schedule C. And, you know, so you could call it differently, but at the end of the day, that's where they fall in as a sole proprietor. Partnerships are, you know, the easiest way of commitment when it comes to two people, and they are limited liability partnerships. This I don't normally see often. Okay, I think throughout 13 years, I only seen once that someone decided to create a partnership. And the way they did it, it was a huge market here in Sacramento, but the way they did it, it was not even created properly because there's a lot of unknowns when it comes to partnership. It's just so easy to create it that at the same time, you know, you could leave a lot of holes undone. I mean, there's a lot of things that should be with the partnership, but it's just the part where it says it's just easy to do and it doesn't cost any money. Then the reason why I met this person is because he had a huge situation with the IRS. And again, because of that, because it was not created correctly. So I don't normally see this, okay? I don't normally see partnerships because to me, in my professional opinion, they're not that strong as far as coverage, as far as documentation that will protect you, okay? I'm not saying they don't work. What I'm saying is that there's a lot of room for mistakes because they are considered being done too easy and too not costly, if you want to say it like that. And then we move to the limited liability companies, okay? This one I see a lot. People talk about LLCs all the time, and they mostly, that's what they want. They want an LLC or they want a corporation rather than a sole prop. LLCs are for one member, which is a single member, or multiple members, okay? The LLCs are the ones that you can create. You're still gonna have, you know, an $800 a year tax, regardless if you decided to work on the LLC or not. Let's say you decided to open one, but you never used it. You still have to have that commitment. You still have to do the tax return. And if you are a single member, what it means is that you will be taxed just like a sole proprietor. And I'm gonna show this, everything I'm saying right now, I'm gonna show in description later, okay? And multiple member, it takes 2 or more to be able to get a 1065 form. So there's advantages and disadvantages to the LLC. Now, the LLC also has room for mistakes. How well, again, it's one of the ones that they mentioned, oh, an LLC is easy to create. Not necessarily, okay? An LLC needs a corporate book. An LLC needs the documents that will protect you, even if you decided to do it on your own, or even if you decided to get a partner. And then we have the corporation and then the S corporation. Let's continue. I think we're gonna have to mute Cecilia's microphone, please. Thank you. Okay, so the sole proprietorship. The sole proprietorship is an unincorporated business that one person owns, okay? It could be 2 people. Let's say you and your wife or you and your husband decides to start a business, a small business, then they can both, you know, be the owners, but normally it's one. And the process that there's no formal creation process. All you have to do is open a business license and, you know, get a DBA, which is also known as a fictitious name, and you're in business, right? You open a bank account, and sometimes you don't even open a bank account. Sometimes it's all cash. That's how a lot of people start their businesses. But I want you to know that a business is a business, okay? Even if you decided to do a small business just for fun, and you're making revenue and it's being lucrative, you still need the structure. Even if it's a sole proprietor, you still need to open a bank account. You still need to separate what is from your business, from your personal, okay? You cannot mingle, and I'm gonna tell you why. It's not that IRS won't allow you. No, you are allowed to do that, but it's not recommended, because what happens is that normally sole proprietors, when they start a business like this, their mindset is into having fun, of doing what they're passionate about. They make money because they're having so much fun that people like them more, right? And you make the money, but you don't understand how much money you're making because you're mingling the other salary or the spouse's salary or any other source of income into this small business's income. And by the time you do the tax return, you're either reporting less income or you're paying more tax because you don't have the proper bookkeeping. So my recommendation is to always, if you're going to have a business, even if it's a small, you have to definitely treat it as a business, even if you stay as a sole proprietor. Because at the end of the day, you might say, oh, I'm going to have this business for 2 years the most. That's why I shouldn't go into an LLC or a corporation. That's totally fair. You're fair. It's fair that you say that, okay? But let's look at it and treat it as a business with the structure of a business, separating every personal situation from your business, because that way you keep the good records of it and you're able to, support your tax return, okay? So as you see, it says no separate tax return. Why? Because you're going to have in a Schedule C. In a Schedule C, if you have a 1099, someone goes and treats you as an independent contractor, then they will give you a 1099. You still have to do in a Schedule C. That's why I always say, if you're an independent contractor, you are an independent contractor, but the IRS sees you as a business because you still have to do in a Schedule C. You still have to go through the bookkeeping situation of what you spend on, and you have to, make sure that those numbers are to the penny. You have to reconcile your books, your bank statements, or your Venmo, however you're getting paid. You have to definitely make sure that everything is reconciled. And at the end of the day, you're still a small business, okay? And as you can see, it says no double taxation of profits. Okay. It's easy to integrate business of use of home deductions, especially after COVID. There's a lot of people that are working from home, right? And they started their business and they're wondering, how am I supposed to include the electricity and all this? Well, it happens that you have to be careful with that. Okay, you can do it, but you have to be careful. I have a client in LA that and they became my clients because IRS was auditing them for the last 3 years. And the reason of the audit was because the accountant that was helping them told them that it was okay to put all utilities, all the expenses from the home, because they were running the business out of the house, and the rent. So if they're paying $2,000 of rent, the rent was included as what was it? The total would be $24,000 a year. That's impossible. It's not doable. And that's why IRS went after them. So when we met and I understood why, because but by that time they've been assessed for the first 2 years. So I read the IRS letter, of assessment, and it was clear that they were abusing the business use of the home deductions, okay? And a lot of times we don't know about it. A lot of times we file because someone told us that that's the way it should be. But, even though there's deductions available, but you have to know the law. And sole proprietors are able, or independent contractors are able to get that deduction. We just need to make sure to fill out the right form, but also, be fair about it, okay? Because the whole house is not used for the business. And now, if you're a daycare, then I wouldn't be telling you what I'm saying now. If you're a daycare, then you can definitely use the whole house, because you cannot prevent kids from going anywhere in the house. The whole house is available for the kids, right? Okay, so it depends. It depends what industry you're in, but most likely you're going to be limited to what the deductions will be, but again, they're available. Okay, so let's continue. Okay. The cons is that no liability protection. So what happens if you decided to, let's say you decided to start cooking at home and doing, people are buying your good food that you make at home. And especially now during COVID, that everybody was very careful of what they were eating or they were getting the food from, right? So a lot of people started cooking in the house and selling to the people they knew. And one of these good meals turned into a hospitalization for one of your clients. What would happen to you and how liable are you? What do you think what would happen if that hospitalization became $50,000 after eating your food? Do you think that you're liable? Do you think that you have a liability protection? You don't. Okay. So here you are trying to make a living, or maybe something like just to go by because you lost your job or anything can happen, right? We can be all creatives, we're entrepreneurs, so we can start an idea, put it to effect. And all of a sudden, you have a situation that an attorney is after you going for a bill of $50,000 or more. So what do you think about liability when it comes to being a sole proprietor? It can be very scary. It can be very scary what can happen to your small business or to your house. If you have a house, they can go after your house. If you have a car, they'll go after your car. If your spouse is working and you're the one doing the business, they can go after your spouse's, wages. You have no protection. Okay, no protection when it comes to being a sole proprietor. And this is the reason why a lot of people are always wondering, should I stay a sole proprietor? How long should I stay as a sole proprietor? I always say, okay, look, are you doing this because it's a hobby? Is it really a hobby? I mean, even if it's a hobby, you're still in danger, right? Because let's go back to the same example. If you're cooking and this person gets sick, that hobby became a nightmare for you. But if you're a business person, if you are with that mind that this is going to last more than, 6 months, 1 year, and you're going to make it grow, then I would say don't stay as a sole proprietor, even though you can. Okay? Even though you can. I will always tell you, you can start here, but when people come to me and ask me, Brenda, do you think that I'm going to, try to start this business in 6 months? Do you think I should just, make it a sole prop or start from the beginning as a corporation or an LLC? So what I do is I ask them, okay, so what's your goal? Are you going to just, play with this here and there and become your hobby, and maybe tomorrow you don't want to do it anymore? Are you serious about it? What is your intentions of the business? Where do you want to take it? How do you see yourself in 3 years, 5 years? Because as soon as you start telling me these things, then I can give you a proper answer. If you tell me, no, you know what? It's something I've been wanting to do, and I saved capital to working capital. And I have decided to leave my job to put myself into this new idea 100%. So once you start telling me these things, then I will say, you know what, don't stay as a sole prop, because not only you have saved money to put it into the business, but also you're going to put yourself 100% into the business, which means it can be lucrative. Oh my God, can't say it anymore. It could become lucrative for you. Okay, it can give you revenue, the revenue you're looking for, which means that it needs protection. It needs a structure. Okay. Now, I would always tell you that you always need a structure no matter what. Even if you're a sole prop, you still need a structure. But unfortunately, people look at it like, oh, I'm going to be an LLC. I'm going to be okay. They think different when they're already looking into those forms of business because they know they're going to invest money in it. They know that it's going to take them in another level, to keep their books, it's just another, I guess, another mind dimension, if you want to call it like that. But honestly, it works. Okay, it works. And you always have to think, how are you going to protect all your assets? Or how are you going to separate your personal life from your business, which is the hardest thing to do, but it's not impossible to do it. So, and the sole proprietor, normally, you won't be able to get those fringe benefits for owners. And I think Caroline can help me with that. It's very hard to get anyone, it's not impossible, but as far as a business, it's challenging to give those benefits to an owner as that if it would have been a shareholder or just an owner. Okay, there's other benefits that you could get if you become a shareholder, which at the end of the day, it means owner, but it's a shareholder for a corporation or a member. So there's all kinds of benefits, pros and cons onto being or not being a sole proprietor. Okay, so let's continue. Good fit. Again, seasonal or part-time businesses. Okay, and businesses with little liability. For what? Remember, we were just talking about liability here. Home-based businesses intended to operate from owner's life only. Okay, so if you are the one that let's say that that your family will help you with the business for a while, but if you ever decide to close that business or to retire, let's say you want to retire, nobody else will continue the business from your family, then that's what it means, okay? Because it's a sole proprietor. But when I first started, I always like to put myself as an example because I did have a goal with my family. When I first started my firm, I said, one day I want to see one of my kids running my firm. I don't know how I was going to do that because, kids, you can only tell them so much. They decide what to do later, right? So I gambled myself and I decided I'm going to be a corporation. I think it only took me about a year and a half to become a corporation after I started as a sole prop because I knew where I was going. That's why I like to talk to, people to see where they're at, what is exactly where they're going. Because when you know what you want in a business, then you're self-driven. All you have to do is find the right person to help you. So I went to become a corporation, and I said, no, I want my kids to be involved when they're older. They were still children. So yeah, there it is. My daughter is almost graduating as an accountant very soon, but it took a lot of me convincing and saying, hey, look, this is for you and blah. And she, at one point, she loves it now, but when they're immature, they don't know what you're offering them. But there's parents like me that will involve the kids, and if you leave them as a sole proprietor, your business stays as a sole proprietor, the chances of that surviving is less, because if the parents started the business, the structure was never passed from here to a paper, to a system, okay? I'm the one it was my idea. I'm the one who started this. After I graduated from university, I put my effort, money, everything in a business, okay? But nobody can read what's in here. They can only follow, okay? But if I want my daughter to continue with her staff, what I began at one point, I have to put a system in place. So it has to pass from here to paper, okay? So a corporation or a structure as an LLC or corporation will actually make you do that. Because there's no way that somebody else can take over everything you've done or follow or make it better, of course. You know, a system that you have here, if you don't have it, a structure. In a sole proprietorship, normally the moms and pops, businesses that you've seen, they normally don't have that. If the parents are not around, the business doesn't know where to take, what is that we need to do from here. How, you know, there's a lot of questions and kids or whoever it's underneath the parents don't know, don't have a lead. Don't have a lead because there was never a structure or there was never a system. Now, I'm not saying everyone is like that, but till the day, I haven't seen one sole proprietor that can offer a structure for the rest of the family to, you know, continue the business if they're gone. Normally, the business will die with the sole proprietor. Okay, so let's continue. Okay. General partnership. The general partnership, like I mentioned before, is easy to create, no limit on partners, numbers, or types. I have normally seen one person in a general partnership. Like when I say one person, I'm talking about one person being on the general partnership, okay? And it's flexible allocation for profit, loss, and distribution. What I don't like about the general partnership is that, you know, normally you will see it in the Schedule C, okay? So to me, it's the same as having a sole proprietor when it comes to tax. As far as tax goes, I haven't seen the benefit as a professional. That's why I normally don't recommend it, because remember at the beginning I said that I was helping a client. At one point he was being audited by the state, and the reason why is because he created a general partnership. He was the one in the, you know, partnership, and there was a lot of information that he didn't know he needed to have, a lot of documents that were not being filed on time. That easy to create doesn't comfort. I mean, yes, it is easy, but it's so comfortable. It's so comfortable that people don't dig in more into what they're not doing correctly. Okay, so that's one of the reasons why I don't recommend a general partnership, because of what I've seen so far. And people, again, don't really look for them because I don't know what is it with general partnership. It's just not so famous, okay, anywhere. So it says no double taxation on profits. It doesn't have double taxations, but it does have all the taxes, which means federal, state. It has Social Security and Medicare, okay? Again, same as a sole proprietor. So I honestly, till the day, haven't seen, you know, a benefit into this one specifically. That's why I'm not gonna dive into a general partnership. Okay, let's continue. Let's continue. Okay, limited liability company. This is the most requested one. And we will be looking into the limited liability versus the corporation, okay? Because people, this is really where people focus on, oh, let me do an LLC. So we're gonna see differences in the LLC and the corporation. LLPs, I don't really talk about LLPs. I'm sure you heard of them. The reason why is because LLPs, normally who you would see under an LLP, it would be more like an attorney. Attorneys like LLPs. Now, are they famous for business structure? They're not. They're not, because again, you know, only, I think they're so in depth for legality that's one of the reasons why attorneys would like them. But again, they're attorneys, they know what they're doing, right? So I believe that as far as me recommending it, I wouldn't, because if you want something like that, I would send you directly to an attorney. Now, what is the difference between an attorney creating this or an accountant? There's a huge difference. Let me tell you why. Because from an accountant perspective, you will get all kinds of advice, even taxation advice. Okay. An attorney, you go to an attorney, you need to know what you want. You need to know what you are expecting. Like, for instance, they will ask you, okay, do you want an LLC? Okay, I'll make an LLC. What's the name? They look for the name, they do the paperwork. But if you ask them more than what they want to hear, they won't answer you, because you're making them liable. Okay, so and again, this is a general. I'm just talking generally. It's not necessarily. I think I only knew 2 attorneys in town that will definitely be back and forth with me when I have questions. You know, that they will definitely advise me the best. But other than that, nobody wants to talk about it. They don't wanna be liable. Okay. As an accountant, yes, normally an accountant will help you more, because I don't know, at least in my situation, I want to make sure you know what you're doing. Okay. So going back to limited liability company, it can be treated as a sole proprietor, a partnership, or a corporation. So what happens? You're like, Brenda, what do you mean it can be an LLC can be treated as a sole proprietor? What it means is that if you're only one member, okay, if you're only one member, which means one owner, then you have to file in a Schedule C as Charlie. Do you remember me saying that at the beginning, as a sole proprietor, you need to file in a Schedule C? Okay, so that's what it means. It means that you go back to the Schedule C if you're only one member. If you are 2 members or more, then you are able to file in 1065, which is the form that will help you do a limited liability tax return. And going back to a Schedule C, and a Schedule C has all taxes: federal, state, Social Security, and Medicare. Okay. So that means that even though you're an LLC, you get treated as a sole proprietor, even though you're going to say you're an LLC, because the Schedule C asks you, are you an LLC? You have to say yes, but you still have to pay all your taxes. Okay. And on the California side, you have to file a 568, which is a separate form for a limited liability with your personal tax return. So everything's still involved. Okay, you're still managing everything from your Schedule C. An LLC can be treated as a partnership or a corporation. A corporation, a lot of people decide to go for an LLC, and when they see that one member, so I'm talking about one members, when they see that they still paying all the taxes, they say, no, this is not what I wanted. And that's how they decide to convert it into a corporation. Now, let me tell you what I've seen so far. Most likely they convert it, but what they do is they go to the IRS first, and they ask IRS to treat them as a corporation, and IRS will say, yeah, why not? They will agree for you to become a corporation. But the problem is that you needed to start with the Secretary of State first. Okay, so said is that you have to make sure that the Secretary of State will allow you to become a corporation, from an LLC to a corporation. And then after they convert your articles to a corporation, then you go to the IRS, not the other way around. Okay, so I've seen a lot of mistakes being done that way. And I have found myself trying to get them to be a corporation with the Secretary of State, and the Secretary of State say, no, there's another name very similar to yours. I cannot make you a corporation. So we end up filing one form of taxes for the federal and another form for the state. It's a mess. It becomes a mess. That's why it's so important for you to find out which one will fit into your business first before you do anything. That way you're not changing anything later. It's not impossible to do it, but it can, become an issue, okay, along the way. So then it says default to sole proprietor if one-person business, default to partnership if a business has 2 or more people, can make an election to be treated as a corporation. We already talked about that. Advantages, management, flexibility, and the benefit of flow through taxation. Does not have the legal structure of a corporation. It's true. Okay, if you want to talk about how a structure you need to be, it's more structured than the sole proprietor. If you want to think that way, it can protect you. It can, if you start that business that we talked about from home, and you're feeding people and you're making money, you can have an LLC. But the one thing I want you to know is that you have to make sure that your LLC has an operating agreement, that your LLC is formed correctly, okay? Because again, it could be an easier form of structure, but it doesn't mean that it doesn't need the organization. It doesn't mean the documents to say who is what and who's in charge of, what situation. Like, let me give you an example. Right now, I'm solving an audit for let's see, let me see how I can say this. I'm solving an audit for an LLC that the reason why they're going through an audit is because they were not doing the tax, the payroll tax on time. So the IRS decided to audit them, okay? And the problem is that what they're doing is, what the IRS wants is to find the officers of the LLC. She wants to know who are responsible for the payroll deposits. She wants to know who's responsible for the bank deposits. She wants to know who's responsible for the operating of the business. The business is a restaurant. So why? Why does an IRS wants to know who does what? Because what happens is that in an LLC, when you form an LLC, you have to have an operating agreement, which means that you're gonna, let's say there's two people involved. So each will have a responsibility. One can't do it all, right? So you're gonna have 2 people. Okay, so this person A, gets the responsibility of paying bills, paying payroll, paying everyone on time, right? Paying the payroll tax, maybe doing the tax returns. And the other one, the person B, is running the business. Means that it's making sure the clients are happy, that everything, everything else, right? The operating. So IRS comes after the LLC and says, okay, tell me, is it person A or B? Who is the one that was not paying on time? Because they're not gonna go after the one that have no idea. This other person is trusting the other one for doing that, for taking that responsibility that person agreed to do. And so the first thing they're gonna ask you is for an operating agreement. When your LLC was formed, you need to have an operating agreement. And I have found a lot of LLCs that I have met, during my time at the firm, that they come and they have no idea what that means. They formed the LLC because it was the easiest way and doesn't have a lot of legal structure. Okay, that's what they hear. So they go with the LLC, they form it online, and they're done. Everything is nice. As long as you have an LLC behind your name, you're protected. No, it doesn't work like that. Okay, it doesn't work like that. You have to designate who's taking the responsibility for what is happening in this business. So now, going back to the audit, the IRS wants to know who the person in charge of not doing the tax deposits, because if they cannot pay, then they will go after their Social Security. Okay, you see, you're not protected. You're not totally protected here, because the LLC, yes, it's supposed to protect you, but at the same time, if they can find that this person was only responsible, then they're gonna go after the two partners right here. And now she wants both of the partners' Social Security. So what's the worst that can happen? The worst that can happen is that if the LLC can't pay, then they're gonna put a lien under your Social Security and your partner's Social Security. Okay, because at the end of the day, you both are responsible for the LLC. And if one was not doing the work and you never had it in writing and there's nothing to protect you from who's doing what, that's what happens. Okay, so if we go back to saying it does not have the legal structure of a corporation, yeah, you might be right. But when it comes to protection, you have to make sure that your LLC has everything in writing of how you want things done in your LLC. Now, can an LLC be taken after, let's say one day you decide to retire? Yes, people can definitely take, like if you wanted your kids to take, they can definitely take on, but again, it comes with the structure and it comes with the system. Because every business should have a system, okay? We cannot keep everything here. We need to pass it on to a system. And that's a little bit of a challenge when, especially for mom and pops. Okay, let's continue. But before I continue, I'm gonna see if anyone has any questions so far. But if you want.
Brenda.
Hi, Caroline, go ahead.
Yeah, quick question, please. Under advantages, could you please elaborate on the benefit of flow-through taxation?
Sure. Okay, so what happens is that, as you know, okay, let's go back to having two members. If you have two members, then you're gonna get a 1065 to file the tax return. And then with that, you will get a form called K1, like Kilo 1, K1. So that form is an income form, okay? So let's say you made $100,000 gross and at the end you only netted 20,000 and you have two members and each member has 50 and 50% of membership. What does that mean? It means that you each will get a K1 with $10,000 each, right? Because we netted 20,000 and then it's gonna flow through your 1040. Okay, so that's what it means. It has the benefit of through taxation, which means that you don't get taxed on your 1065. It goes through your 1040 as a K1 on your Schedule E as elephant, okay? And then you get taxed federal and state only on those $10,000 on your personal return. And of course, you know, what's the difference between that and one member? Well, one member would have gotten in a Schedule C. And if $10,000 would have been on the net, then you're paying 15.3% of Social Security and Medicare, and you're paying federal and state, whatever the amount is, because we have to take other income into consideration before we give the percentages. Does it make sense, Caroline?
Yes, thank you. So I guess if I'm understanding it correctly, there's no double taxation.
Mm-hmm. That is correct.
Okay, thank you very much.
Yes, we haven't gotten to the double taxation yet. Okay, so let's move forward. Okay, so this, I'm gonna go quick through the single member because, pretty much I already talked about it. Okay, single member, simple creation process, easy to operate and dissolve. No separate tax return, it has a Schedule C. Easy to integrate business use of home deductions. You can do that, because you have a Schedule C. So you can use the deductions of the home if you're operating from home. Liability protection for member except for malpractice. You see? So it's not always, you're not always protected. That's why the documentation that you will form while you're forming the LLC, okay, normally you really need to make sure that you know what you want stated on that documentation. And I normally don't deal with, like, for instance, in our firm, we don't do LLCs. We don't form LLCs because LLCs, even though they, again, people say, oh, they're easy, you can do it right away, and you can be an LLC. I don't see it like that. I have seen so many people in trouble with LLCs that I always say, you know what, if you want an LLC, I can refer you to my attorney and he'll take care of you. But I make sure that you know what you need, because if you don't know what you want, again, you're going to go to the attorney and you're going to ask questions and you don't necessarily get the answers. Okay, so LLCs are very competitive out there, but again, you need to be prepared to know what you need in your LLC. Okay, let's continue. Okay, again, the cost of self-employment tax is assessed on the entire profit of business. Transfer of ownership can be complex, limited access to fringe benefits for owners. And law regulations for LLC vary widely among states. We see that a lot because we do have clients that have LLCs in different states, and it's totally different. And a lot of them ask me, can I form an LLC in Nevada and operate from here? I will think twice before I tell you yes. And let me tell you why. Because as soon as California finds out that you have an operating business in California, they're going to ask you to register in California too. Okay. So at the end of the day, they want their piece of the pie. So what was the purpose of you registering your business in Nevada to begin with? At the end, I believe that it was a waste of time and a waste of money. So the regulations for the LLCs in California are very strict, and you always have to know, meaning consult. Okay, consult before you open an LLC anywhere else, knowing that your business is going to be here. Now, if you are going to be doing an entire business from like virtually or maybe online, then we can have a different talk, right? Because even like that, I will still need to know a lot of information before I can recommend that you register somewhere else. Because again, California, you don't play a game with California. They know, and they go after you, and the penalties are horrible. Okay, let's continue. Okay, what's the good fit for a single member is businesses with potential liability in operations and businesses intended to operate for the owner's life only. Okay. Because again, people that start LLCs as a one member, they know that they're only going to do it for a certain amount of time. They are not, it's not their goal to transfer, this business to their kids or anyone that they can think of. So they just want something simple, but just make sure that simple doesn't become a nightmare. Okay, the protection has to be, it's your foundation of how you are going to display it. If anybody wants to sue you, or if you have an audit, how are you going to protect yourself from the beginning? Let's continue. Okay, a multi-member LLC. Limited liability for all members except for the malpractice. So let's say that there's two dentists that decided to do an LLC. And one of them did malpractice, okay? If you have an operating agreement and you have all these documents saying that if one does malpractice, it's not gonna hurt the other one. Let me tell you, there's still a big chance that it will hurt the other one, because it depends on the laws. It depends on what happened. It depends on the state. It depends on the bond that they both have. It depends on a lot of factors. Okay, so even though this slide is saying except for malpractice, or you're thinking, oh, I might be covered, I wouldn't necessarily, think that you are protected. Okay, it's important for you to know that, because I have seen so many lawsuits going on recently. It's just incredible. It's like lawsuits right now, it's like going for an ice cream. It's something that it's there, and people are making it bigger. There's lawsuits going on between against business owners of I don't know, something that I would never think of it could be possible. Okay, so I think that the more protected you are, the more documents that you have in place, the more insurances you have, the more you take care of yourself, okay, the better. The more you keep your personal aside from your business, completely separate, the better. Because if you are a person that, yes, you might have the operating agreement, you may have all these bonds, you might have all this general liability insurance, but at the end of the day, you're mixing your personal with the business, then you have no coverage. Your veil is ruptured, okay? You were the one who didn't respect your business because you're mingling everything personally. And if you cannot respect your business, nobody can. You can ask somebody to come and respect it when you didn't. So forming a LLC or forming a corporation, it means that. It means that you decided to separate that asset from your personal life. And you decided to respect it, and you decided to pay yourself. You decided to not play with those funds for personal ventures. Okay, that's what it means. So for that, if you can show that, then definitely there's respect. And that's another thing that in this audit that I've been solving, the IRS, they have no mercy for payroll tax. If you owe payroll tax, to them is the end of the world, okay? Because the payroll tax is not the companies, it's the employees. So it's a trusted fund, and they want you to respect that. But the reason why this business was not paying is because COVID totally kind of destroyed them in a way. They had to close for COVID because they didn't have a drive-through. So there was nothing going on, but at the same time, they got the PPP, so they had to do the payroll. So it was a whole chaotic situation here. And IRS cannot comprehend any of that. IRS is like, no, if you're doing payroll, you need to pay taxes. But once we show the bank accounts, statements, once I show the person and say, look, they are doing everything by the book. I understand that they're not paying their payroll tax. And I can show you how this business, was closed for days or months, and practically we need to have a story, okay, line up. But once she saw that the LLC is being respected for, not mingling with personal life, she told me, she said, okay, look, I can see consistency. She changed her perspective, And now she's not going after closing the business because she understands that, you know, they were casualties, you know, during COVID, and there's things that it was out of control, right? That happened out of control. See, so or the members, and even though they're not supposed to stop paying the payroll tax, but again, you know, it is what it is. So she said, look, I have found that they are consistent, that they're respecting the funds of the LLC. And, you know, that makes me more like we are not going to ask them to start selling assets or to close the business. We're going to work with them. So, and that's only ARS, okay? I can tell you courts, anyone that goes after you want to see how much you respect your business. And then it says pros that there's no double taxation of profits, okay? So let's continue. I have another example to give you, but I'm gonna give it to you when I go to the corporation because I have another client that is going through court for a lawsuit right now. Okay, and then it says cons requires a separate tax returns, law regulation, LLC. Okay, we already seen this. Let's see. A good fit is businesses requiring equity capital. A lot of people go into an LLC because it will be easier for them to get a loan, a business loan, okay, to get capital, working capital. So that's why it says that businesses with potential liability in operation, businesses intended to exist beyond the lives of the members. Here and there, you know, you can see that the rest of the family can take over. I've seen it, but not a lot. Businesses expecting changes in ownership over time, okay? So I have a client that owns two LLCs, like let's say LLC A and LLC B, and these two LLCs own a third one. That can happen too, okay? So the two LLCs A and B are together, it's two members, two brothers. So the two brothers here are the same of two brothers here, okay? They form two, same people. And these two LLCs are the owners of the third one. The third one is a restaurant. You follow me? So you're able to do that too, okay? What is the purpose? It depends. It depends on why are you doing it. Maybe you want more protection and you can do that too. I've seen that a lot. And let's see. Yeah, so it says businesses expecting changes, ownership over time. Okay, let's continue. Any questions before we get into corporations?
I just checked the chat. I don't see any questions yet.
Okay, so corporations. Let me tell you this example before I go into corporations. I have another client that he's also a restaurant. I have a lot of restaurant clients, so I want to talk about them. I have all kinds. So, you know, we have people that, let me see, we have nail salons, we have beauty salons, we have all kinds of industries, okay? But the restaurants happen to get in trouble all the time. Don't ask me why. I just know that they need a lot of help managing this. So this client, he owns 15 restaurants right now, okay? And he has employees all the time that comes and go, like any restaurant. It's very hard to retain them, especially after COVID. So there's this girl that she was like 16, maybe 16 and a half. And she started working for him in one of his restaurants because they're all corporations. So what he did is he separated all his corporations, which is very recommended. Okay, it's always recommended to have separate books and separate entity for each business, even if it's the same industry, because of what I want to tell you right now. This is the perfect example of why. So the girl, I think she only worked like a day for him. And somehow, I don't know how, but somehow there's this attorney that approached her and asked her if she got her breaks on time while she was working. And she said no. And the attorney took advantage of that. Okay. So she went to, the attorney involved the parents because she's a minor, and they started a lawsuit against my client. This is 2 years ago. And so the client said, oh, you know, he really didn't pay attention to it because she's a minor, because the parents are the one who were arguing back and forth, and they want money. And he's not paying attention to it. He's too busy, right, to pay attention to it. So he goes for another year and a half. And last year he calls me and he tells me, Brenda, I don't know what to do with this anymore. And I said, what's going on? I said, well, this is what's happening. And you know, at the beginning, I thought it was, this child is just messing with me. But it happens that the attorney has approached another 2 more employees, and now it's become a lawsuit of 3 people. And they're going for $1 million. And I was like, what happened? And I said, aren't you giving them the breaks? Aren't you keeping, you know, your timesheets and all of this that we've been telling you to do that, you know? And he's like, yes, but not everybody follows. And my manager, sometimes they slack and they don't follow through. So, and I can't be in all these 15 places. So I understand where he's coming from and where he's standing. You know, it's so hard to manage all these restaurants, right? So the thing is that now he needs another attorney. At the beginning, he was dealing with this attorney that only took $160,000 off him, trying to do something about it, and he never did anything. So now he needs another attorney. He's like, what do I do? And so I sent him to another attorney. And the attorney, now he has 6 attorneys in the group of the attorney, because between then and now, they want $2 million. So from 1 million, it went to 2 million in about 6 months. So one day he calls me, he says, they want me to go bankrupt. The attorney was suggesting to go bankrupt with, you know, because what he did is he has a corporation shell that covers the little corporations, all the corporations, okay? The mother, let's call it the mother corporation. So he said, they want me to bank, they're suing the mother corporation. And all the corporations said, that's impossible. They can't do that. He said, why? Because the reason why you created the mother, you know, corporation is because this will cover the little ones, but the little ones at the same time, they are independent of each other. So they need to go to the one specific one that she worked at first. Before they can't just go and, you know, try to get everything. It's not possible. So I said, you need to talk to your attorney. And he did. He talked to the attorney, and the attorney told him that, you know, it was true. That's the way it should be. But the thing is that now what the attorneys are suggesting is that he needed to have board of directors, because the owners, the shareholders, are the husband and the wife for all corporations. And the reason why he needed board of directors is because they need to prove in court that he is not doing with the money whatever he wants, even though he's a corporation. You follow me? So the reason why I'm giving you this example, this scenario, is because I want you to understand that from an LLC to a corporation, It's very different, even though they're both entities and they're both there to protect you, okay? So in the corporation, he had everything done correctly, but what he did is he named officers, him and the wife. And, you know, at the end of the day, yeah, they get their own payroll. They're doing everything by the book, but they have no supervision, if you want to call it like that, to how are you managing the money? How are you managing the businesses? Okay, so the attorneys are saying, hey, you need board of directors. You're too big. You're just not a simple corporation. You need to make sure that the court can see that you don't take decisions on your own, that somebody's there to watch you or watch your back, right? So, but the good news is that he, you know, he can bankrupt that one corporation if he needs to. That's what the attorneys are telling him, that he can go bankrupt because there's no way he can pay $2 million on this. And, you know, he will be able to solve. That's an option. It's an option for him. I'm not sure if they're going to go that route, but the thing is that one person can, you know, take you to this horrible avenue, okay? And you cannot, today, in this era we're living, you cannot say, oh, that's not gonna happen to me. Because again, this is only one example of what my clients are going through. I have other situations, and believe me, these are not bad people. It's not like we can say, oh, it's karma, right? No, these are not bad people. These are people that are very hard-working people that are here to make a living, to make sure that their kids are taken care of. Sometimes they don't sleep. This guy comes to us to pick up his payroll checks, and he tells us, I haven't slept for 2 days because in different branches, my employees keep on calling sick, and I can't do anything about it. So I have to go and, you know, replace I have to go and work. So a corporation, the question is, who should incorporate, right? Why am I gonna incorporate if I'm this small? If I'm a small business, why am I gonna incorporate? And I'm gonna explain to you why. Okay, so let's continue. Okay, so the corporation, it says that no liability for non-active stockholders, which means shareholders. Okay, let's say that you and your brother decided to go into a corporation or to start a business, and one of them is not active. So that happens a lot. There's a lot of silent investors, okay, that they'll just want to be a stockholder, but they don't necessarily have nothing to do with the business. Then, you know, you're able to do that, okay? No restrictions on ownership. Ownership can be transferred through the sale of a stock, okay? I've seen that happen a lot too recently. And a separate entity from stockholders. Fringe benefits for owners, officers. If you want to get your health insurance through your corporation, I know you have to have a minimum that are going to be insured, but you can do that, okay? And I see that a lot more happening here than in the LLC, although I'm sure that the LLC can do that too. But I see the corporation, the way that people think when you have a corporation is so different than when you have an LLC. I don't know why. What's the effect on people's mind, to be honest? But I see a lot more corporations taking care of those fringe benefits than when you are an LLC. Can have an ownership interest in other business entities, that too. Just like I mentioned that the two LLCs own the LLC, this can happen too, okay? And then it's a perpetual existence. Like in my case, I knew that one of my kids was gonna take over, and you know, that she will definitely take over, and you know, the business will continue to provide me benefits after I retire. Okay, so you have to have a goal. What is your goal with your business? And if you think that it should be there for a very long time, and you hire a good manager and take care of the rest, then you can get benefits for life. And raising capital can be achieved by issuing stock. So if you need a working capital and you feel like you really need, if you can sell some stock, you will get that, you can. Okay, so that's how a lot of people raise the working capital too. Okay, let's continue. Okay, so the concept is that there's double taxation of profits. What does that mean? It means that you have to file at 1120, which is the form for, I call it the Corporation C as Charlie. Okay, there's two. Corporation C as Charlie, and there's one as Sandra, S as in Sandra. That we're gonna see that after. This one will have tax on the net income, but also if you, let's say that you decided to do dividends as a shareholder, you will pay tax on those too. Okay, complex and expensive to create and maintain. Yes, because every year you have to pay $800 to have it, regardless if you make money or not, or regardless if you're using it or not. But reality is that if we go back to the LLC, you still have to pay $800 for the LLC every 2 years. Okay, so I think that, no, I'm sorry, every year for what it's every 2 years is the Secretary of State statement of information that you do every 2 years for the LLC. For the corporation, you do every year. So it's a statement of information. Okay, let me correct that. The $800 you have to pay every year for both. Okay, so if you want to compare both of them, it says requires separate tax return form 1120. It requires a regular board of directors meeting and minutes. You have to have minutes. If you're going to do financial decisions, you have to create minutes with special minutes. And that's, you know this. It could be as simple as the date, the location, and who's meeting, and signatures, and what's the meeting for, what the decision is made on, and you have to follow through. Okay. Excuse me. So if you notice, everything I told you is a structure. Okay, it's like a routine, if you want to call it like that. It's a routine that you must have, but reality is that I think every business should have it, regardless if it's incorporated or not. Because how do you remember what you need to follow through if you don't have a minute, or if you don't have a document saying that you're pending on to this decision, or you have to do something? I have come to a conclusion that all of the businesses, regardless if it's a sole prop or, LLC, partnership, or corporation, need a system. And the system is in the infrastructure. You need to be able to commit, to delegate, to make someone responsible, to be in compliance. Everything that a structure needs, every business needs. Okay, we cannot rely on this just because you're a corporation, or just because you are a corporation. No, I believe that if you have a structure from a sole prop to a corporation, we are only looking for success in every way. Okay, because the reason why a lot of sole proprietors are not successful is because there's no reminders, because there's nothing telling them that they need to be in compliance. There's nothing, they're not creating a system to grow, or assist them to pay their taxes, or assist them to do tax deposits or estimated taxes. So there's a lot involvement in something that I forgot. I had to do that because my mind is everywhere and I'm trying to make sure that my business grows, right? But isn't that the problem of the corporation too? If you have a corporation and your foundation is not correctly done from the beginning with the structure, you're going to have the same problem as a sole proprietor, as an LLC, as a partnership. It doesn't matter who you are. Okay. So I believe that your structure has to begin with that entrepreneurial idea that you have from the beginning, and make sure that everything lines up for you from the beginning to cover everything to protect yourself from the beginning, right? Which is called a structure or a system. And then you can move forward to where you need to be. And if you know that you need the protection of an LLC or a corporation, or you want benefits, fringe benefits, maybe in 6 months, maybe 9 months, then you probably want to consider going through or structuring a corporation from the beginning. You don't have to wait till I make that buck, because, like, for instance, like 3 months ago, I met with a friend, and she said, you know what, I'm thinking about doing consulting. She wants to do consulting too, and she said, but when should I start my corporation? I said, no. Why don't you line up your contracts first? Line them up first, set the date when you're going to start. Make sure you have those clients, right? I'm not saying you start working. What I'm saying is get the contracts in line. Make sure that potential client is now a client that will start in a certain date. Then you will start a corporation. And as soon as you start a corporation, that contract is engaged, which means that you're going to start making money from day one, right? But if you want to start a corporation and then look for the clients, I'm not sure. I mean, I'm not saying it's not going to work, but it's going to be a little more challenging. So, and you already have the expense of the corporation. Okay. So going back to this, let's continue on the slide, because I want to share with you the differences between the corporation C and the S. The corporation C will normally be for people that want to do business, not, let's say, in different states or international. Some corporations are domestic, and the S is for domestic. Gracie, can you continue the slide, please? Okay. A corporation S is for a small business corporation. Shareholder elect to have corporate income tax like a partnership. Okay, must comply with election procedures. So if you're a C corporation, you can still have it. If you're a small business, you can still have it. It's not a problem. But what happens is that, let's go back to the double taxation. Nobody wants that, right? So when you want to choose an S corporation, is when you know that you can save tax. And how do you save tax? By selecting an S Corp. How do you select an S Corp? I said, okay, Brenda, I want to do consulting. And, my goal is to not only, it's not only going to be me, but also I want to save taxes. Okay. So what you do is you go for an S corporation, because you're going to be domestic too. Okay. You have to be domestic. It has to be in California. But if you tell me, no, but I want to do it online, what happens if I do it online? Okay, it's not a problem. You can be consulting anywhere else, but the money, the income is being charged in California. Okay, because IRS cannot go after you because you decided to do a virtual consultation and say, oh, you were consulting in New York, so now you don't belong as a domestic. That has not happened yet, and I don't think it's going to happen. Okay, so you are okay. You are okay to become an S corporation. What does S corporation means? It means that you're gonna fill an 1120S as Sandra, but you don't have federal tax. Okay, you will not have a federal tax on your corporation tax return. What you do have is a 1.5% of the state tax, which means that you're either gonna pay $800 or 1.5%, which is to me nothing compared to the corporation C. And what happens to the net income from your 1120S? What it does is this: the corporate income tax is taxed like a partnership. Remember how I told you that when you are an LLC, you get a K-1 and it flows through your 1040? This is the same concept. Okay, so the corporation S will give you a K1 as kilo one for each shareholder. How many shareholders do I need for an S corporation? You can start with 1. You don't have to be 2, 3, 4. Okay, you can start with 1. You can save those taxes. You get the K1, and the K1 goes to your 1040, Schedule E again, okay? And you get taxed on your personal level. How about that? So a lot of people, when they're small businesses and they know they're not gonna, get bigger or they're gonna be domestic, they choose the S corporation because the S corporation has been made for small businesses. And IRS lets you take advantage of that compared to the LLC. Remember, LLC 1 member, you're still getting tax on your Schedule C. It was like you're still a sole proprietor. You're still paying all the taxes, okay? S corporation, you don't get to pay all the taxes. You get to pay federal and state at your personal level on the net income. But there's one requirement, because there's always something, right? So the requirement is that the shareholder has to be in payroll. So let me give you an example. If you, let's say you net $100,000 on the S corporation. So IRS is saying, okay, we will allow you to pay yourself a reasonable income. What does reasonable means? It means that to them, it could mean that you can get $50,000 in payroll and the other 50, let it pass through your net income on a K-1. That way you only pay federal and state, but you already pay all your taxes in the payroll, which means the W-2 that you're gonna get in January has $50,000 gross wages, okay? That means that you already paid Social Security, your Medicare, your federal, your state, your unemployment. So if you ever need to go on disability or unemployed, you have those benefits because the corporation is allowing you to do that because you're an employee. You become your own employee, right? So with that is that you're getting a W-2 with $50,000 and you're getting a K-1 with another $50,000. The W-2 is a deduction to your corporation, okay? And the net income that you get of $50,000 will pay federal and state. What do you think? I think that, to me, it works, okay? It works because you are saving on those $50,000, you're saving 15.3% that you would not be saving if you were in 1-member LLC. Okay, so that's why a lot of people, when they become an LLC, they go 1 member, which is 1 person, right? 1 owner. once they do the tax return, they're like, oh my gosh, I didn't do anything different. I'm still in the same boat. I'm still paying the same taxes. And that's when they start considering going as to an S Corp. And this is when it gets messy, okay? Because nobody told them this. Nobody told them that there's a difference. Now, if it was 2 members or more for the LLC, then everything is different. You don't have to go through the Schedule C, you get a 1065 file, and then you get a K1, and you know, you save those 15.3%. Okay, let's continue. I know I have 19 more minutes. I don't know if you have any questions, but I will continue to tell you how to do the election of the corporation S, okay? So if you notice, it says that you have to file a 2553 with the IRS within 75 days of incorporating. If you don't file this form, you're not an S corporation. Even though you're in your mind, you are, but you're not, okay? Because when you go and do the tax return, the IRS will not allow you to file an 1120S. It will ask you to do an 1120 and you have to pay the taxes related to that until you get approved by the IRS. If the IRS doesn't send you a letter of approval saying that you are an S corporation, then you most likely have to file an 1120. And believe me, it becomes a headache, okay? It becomes a headache because a lot of people trust that just because they file it and they never got a letter, they say, oh, IRS took care of it. No, it didn't. It didn't take care of it. It's important that you understand that you have to have an approval letter. And if you didn't get it, then you have to call IRS and say, IRS, I sent this letter on this date and I haven't received any response. Did you get it? And they're most likely gonna tell you, oh, it's still not being filed. It's still on the records, but it's not filed, or there's nothing. Maybe they lost it, which they do it a lot. So you have to be ready to send a copy, okay? And then sometimes you can do it over the phone. If you do it over the phone right away with them, they will take care of it and you will get processed. If you don't get processed, then you have to deal with it until you get processed and, you know, accepted. In the meantime, you still have to file as an 1120 and pay the taxes related to that tax. Let's continue.
Sorry about that. There you go.
And also the 2553 has to be filed by all shareholders. So if you have 5 people involved in that corporation, all 5 of them need to sign it because they need to put the social securities in the back and have signatures, okay? It's not only one person that is filing, everybody is involved. The process, the liability protection similar to the, C corporation, no double taxation of profits. Excuse me. Ownership is easily transferred through the sale of a stock, separate entities from the stockholders. Self-employment tax is not assessed on the entire profit of the business. Okay, it's exactly what I explained to you a few minutes ago. And losses can be offset to shareholder taxable income. Look at the last one. The last one says losses can be offset to shareholders' other taxable income. So what if on the first 2 years your income, you're getting some income, but not exactly what you were expecting, and you're investing more than in that business, which happens. It happens a lot. But in the meantime, you have a second job, or maybe your first job, and the business is your second job, and you have a W-2 that you are making. Let's say you're making $100,000, okay, on that W-2 from the other job, and you get a K-1 with a negative $20,000. So what the K-1 is going to do is going to offset the wages of $100,000, which means that now you're going to be only taxed on $80,000. Okay. That can happen with the S Corp, but it can also happen with the K-1 from the LLC. So as long as you have a 1065 with a K1 on negative or a 1120S, which is the S corporation with the K1 and negative, it's gonna do the same thing. It's gonna offset your other income. How does the IRS sees this? They don't like it. Okay, they don't like it. But if you keep good records of everything that happened, if you don't mingle your accounts, if you are very legit on your record keeping, your bookkeeping, your payroll, everything that you have to do, and they honor you, they will respect it because they don't have a choice. Okay. So out of the 5 years, this is the way they think. Out of the 5 years, they will allow you to go 3 and negative, because a business is a business. Sometimes you don't have control of what's happening, okay? But if you go year after year, out of the 5 years, all of the years are negative, there's something wrong. And they will come after you. And what they can do is they can, instead of, allowing you to offset that income, they can tax you for that income that you were not taxed from the beginning. Because what happens is that with the business, you have to make sure that it's a business, not a hobby. If they decided that you are actually holding a hobby, not a business, then they will not allow you the deduction. They can change that for you. Okay, so it's very important that when you go in business, you understand that you only have a certain amount of time to make that work. And how do they decide it becomes a hobby? Well, it depends. Like, for instance, one example could be that they go and check if you're advertising. They go and check, what are you doing to promote this business? You have to be doing something different. Like every other year, if 2 years in a row, it's something that you have in your bookkeeping and saying that, let's say you invested in marketing, okay? You invested in marketing $500, but that was not enough. Then they will expect you to do more the following year, or maybe do a radio show or do something. You have to do something different. You need to be creative to be able to make a profit out of this business. And that's what they check the books. They want to see what you're doing, okay? If they see that there's no intention or effort into marketing or any creativity to make this happen, then they will tell you, this is not a business. You're using it to offset your income, and they will make it a hobby, and they will tax you on the deduction you had previous years, and you can already imagine the tax consequences on that. It's not good. So let's continue. Okay. It says that the concept is complex and expensive to create and maintain. It can be, okay? When it becomes expensive? When you're not making money. That's when it becomes expensive. If you have a plan, a business plan, which is something I strongly recommend when you're going to start a business, you have goals. The time is of the essence on your goals, right? But if you start something just to wander around and to see how it's going to go, then I can definitely tell you it will be very expensive, because you have to pay the Secretary of State every year, do a statement of information. If you don't, and you know what, it's only $25, but if you didn't pay it on time, then now that franchise tax, we're sending you a bill of $250 as penalty, and you still have to pay the $25. So that's one thing. If you didn't open the bank account and never did anything because you decided to start the following year because you didn't have any time to start the business, then you still have to do a tax return, unless you decided to open your corporation after December 15. if you decide to open your corporation after December 15, then you don't have to do a tax return. But if you did anything earlier than that, then you have to do a tax return, okay? And even if you are filing for as a zero, you still have to pay a tax return fee, and you have to pay the $800. Now, the first year, the corporation will allow you to not pay the $800, only the first year. Either the corporation C or S, it doesn't matter. You still are able to, you know, skip the $800 on the first year. But believe me, the second year comes very fast and furious, if you want to say it like that. You still have to pay the $800 as soon as possible. So, and then the ownership is limited of a specific types of entity, requires tracking the basis of stockholders. Okay, so you have to keep a balance sheet. It's not just saying that we're gonna do the bookkeeping. No, you have to keep a balance sheet because you have to have the basis of the stockholders. It's a lot more information that you need to have. But again, if you are in for the business for the long term, you might as well learn this from the beginning, structure the very right way for you and make it work, because it can definitely protect you, but also it can give you the benefits, okay? The benefits, regardless, if you decided to choose an S Corp, a C Corp, or an LLC, it's always gonna give you the benefits that you need, because everybody's different. And you might be needing an LLC today, but tomorrow maybe it will be different. Then you decide to go into another entity. So I always say, look, you have to really question yourself. Where are you going? What's your business plan? And then, you know, look for the right source to guide you into your needs. Okay, you have to look at your needs to be able to choose the right form of entity. It's not what your neighbor or your friend is telling you to do. Okay, because everybody's different, everybody operates different, we all have different goals, and sometimes what benefits my friend, it won't benefit me. So with that said, I believe that, you know, the more you dig into how you need to do this, the better for you. Okay, I think we have how many? One more? Say one more that we have. Let's slide, Gracie.
I believe we have one more slide. You want me to check?
Okay, let's finish that one then.
It was good.
Oh, I think it's another one after this.
Do you want me to go forward?
Yes, please. Okay, business formalities. A common problem with the closely held business is the failure of adhere to business formalities, which is exactly what we've been talking about. Okay, trouble can occur when business and personal funds are intermingled. Don't forget this. It's very important that you separate your personal life from your business life. The business is not adequately capitalized, or reasonable compensation for services is not paid. One thing that I always strongly suggest is to, if you are gonna invest capital, working capital from the beginning, you have to know if this is gonna be a loan to the business or if it's gonna be just working capital and you're gonna forget about it, okay? Because normally you don't think about that. You just know you're gonna put the money in, but you don't know if you want it back later or not. If you want it back because it's a loan, okay, becomes a loan to the business, then it has to go in the balance sheet. And you have to make sure that you have a document that will, certify any audit. Because normally if you decided to put $100,000 and then 3 years later, you want that money back because the business can now pay you back. And all of a sudden IRS sees a check coming from your business to your personal, you don't think that's gonna be red flag?
Yeah.
It will be a red flag. So you need to definitely have, something in writing saying that you lend the business and the money was coming from this source. Okay, maybe it's your retirement, maybe it's a loan from or maybe it's a equity from your home. I don't know. There could be different sources, so you need to be able to have that. And the other thing that says here is that trouble comes when you're not reasonable, when you don't have reasonable compensation, which means that sometimes we work so hard and the one person that gets paid the least is us. So that has to change. I always tell my clients, you need to put yourself as priority. I understand. I said, I'm a business owner. I totally understand where you are. You need to take care of everything first. But even if it's $100, you need to pay yourself, because that will give you a sense of compensation. It gives you energy to continue, but also you can start growing from $100 to $1,000, right? It's just that the fact is that you need to be able to separate the funds from the business to your personal. That's really what it is. Okay, I think we have one more and I finish. It says courts can pierce the corporate veil if they find that the corporation is an alter ego of the shareholders, which is likely to occur when shareholders pay personal expenses from the corporation checkbook or vice versa. Okay, something that I've been repeating over and over. Let's go one more. I keep on saying that one more, but I know it's coming. Let's continue. Let's continue. Let's see. Okay, this is super important. Actions to require of a corporation. Are you gonna be able to share this with them?
Sure, I can send it in an email. Yeah, I can send it afterwards.
I think it would be a good idea, because that way they can go over it. And like, for instance, right here, the actions required for a corporation, how you do it, like file articles of the corporation, file yearly statements. So practically everything that I have mentioned, but now I put it in, in a list of things that you will need to do. They're very similar for the LLC. Okay, so it's not so much different. There's a couple of things that might be different, but in the meantime, you have an idea of how you can structure one, okay? And then let's do I think the last, hopefully. Okay, this is the one I was looking for. Professional fees, this is an idea, okay? I want you to have an idea how accountants, attorneys will charge or online services. Online services will always be the least expensive, but they're the most trouble because they don't do anything for you except for the articles of incorporation. They send you a book, and the book you're supposed to sign, and I have gotten a lot of books with no signature after the fact that they're already in trouble. Okay, so the reason why I have gotten these clients, because they already have a lot of letters with penalties and they have no idea why. So they come to me and I said, do you have a corporate book? Yes, we do. They hand it to me and it's in blank. Everything is because they decided to go through this. So all I'm saying is be careful, be alert. That's why I am giving you a list of things you need to do. So you know, okay, how to follow of what you would have to do. It's always better to either get an attorney or get an accountant to do it, someone that will definitely walk with you in this process, so that it doesn't become a nightmare for you, because this forming an entity should be able to help you, okay, to be better, not to mess what you're trying to do for not knowing. So with that, I'm gonna close today, and I hope that this information helped you. And hopefully we will see each other here.
It helped a lot. Thank you very much, Brenda and Gracie, for coordinating this. We appreciate it.
Thank you, everyone. I wanted to, I don't know if you guys.
Thank you, everyone. I wanted to.
Oh, I'm getting feedback. Would you guys go on camera so I can take a quick picture?
That would be nice. I like pictures too.
Me too. Thank you so much, everybody. It's so nice to have a picture. That's why I asked.
Oh, there's Marco.
Hi, and I know one of the folks said they were having trouble with their camera, so I totally understand. We'll just have your name on there. But let's see. I'm going to say 1, 2, 3, and then I'll hit the new button. doing the snippet thing. Okay, so here we go. 1, 2, 3. Got it. Thank you so
Thank
much.
you. Thank you, folks.
everybody.
Bye-bye.
Thank you. Have a great day. I will send
Bye-bye.
a follow-up email.
Thank you. Have a great day. I will send a follow-up email.
Thank you very much. Have a great day.
You too. Bye-bye.
You too. Bye-bye.